There's a lot of noise. Now it is. Now it's fine. Okay, Dhiman, so we'll start. Can you just brief me what you are doing currently and what you know about stock market trading or investing?
So what, according to me, I know about stock market is there are big investors who buy the share of the company and they sell it, and we being the persons who see the stock buy it and sell it at the right time to make our profits.
Okay. Right. So it is basically like a trade, right? So it's like a trade, buy and sell trade, right? Oh, like normally we go to a fruit shop or a vegetable shop to buy it, right? So that is also similar to this stock market. In stock market we buy and sell shares, but instead we go to shop, we buy fruits and vegetables. So that is also a trade in terms of layman language, and this is also a trade which we do buy and sell, right? So there are a couple of basic points that first we need to know, right? What about the basics of stock market, right? First is like our motive, right? We want to trade or we want to invest, right? But our main motive will be to earn profits, right? Or to earn passive income. So there are two kinds of people in stock market. One who are looking to earn passive income, right? And
Yes.
and other one is like profits for long term, right?
Yes, sir.
Right. So there are two ways you can do it: passive income and profits, right? So passive income is a kind of thing many people are doing for intraday, like same day they want to earn some money, some small profits or something like that. That comes under passive income. Or they want to earn some profit within 1 week's time or 1 month's time or something like that. That will come as a part of passive income because they have a capital and they want to trade based on that. They will earn some profits. That is also a part of profit, but that comes under passive income for them because their full-time job is to do trading only, right? Like me, I'm not working, right? My job is full-time in the stock market only. So for me, it is a kind of passive income and profits also, right? Profits is like people keep it for long term, right? 1 year, 2 years, 3 years, 5 years, like that, right? They want to invest it for a very, very long term to create wealth. So that is called as profits. But these two statements can be a common for a specific trader also, right? Because what I have done is that, let's say I have a capital of 50 lakhs. So what I will do, I will keep 25 lakhs to earn passive income, and remaining 25 lakhs I will keep it for long term so that I can create wealth in long term, right? For 2 years, 3 years, 5 years, 10 years, like that. So this is how many people do the planning in stock market, right? Second use case is like, let's say there is a trader who is having only 2 lakh of capital, right? So they mostly focus on the passive income part only because their capital is less, right? So with 2 lakh capital, they will do they will earn passive income for a couple of years, like 4 years, 5 years, and then once they create a wealth, then they can split their capital in long term and short term, like that, right?
So for a shorter amount, we need to do passive income, and when you have a large capital, we could opt for
So
profits.
for wealth creations, right?
Okay.
Right. So this is our investment motive, whether you want passive income to earn passive income or you want to create wealth, right? Some people who are having 1 crore capital, they may not be looking for like passive income. They may not want to do intraday, or they may not want to do for 1 day or 2 days, right? They may want to create their wealth for long term, right? They want 1 crore to become 5 crores or 10 crores, like in long term. So that is why they may opt for wealth creation. So that you have to decide your investment motive. What is your investment motive? What do you want to do in stock market? You want to go for a passive income thing, or you want to go for a wealth creation, right? So most of the people who are working, right, so they want to go for wealth creation only because they are already earning from somewhere else, right?
Yes.
So that is called as active income, from where they are earning, like they are doing job or they have some other business, right? That is basically a active income. So they will take out some money from active income and put it in stock market, right? So this is clear. Any doubt in this active and passive part?
No, sir. So currently, if I have to start investing, I have to do passive income only. I mean, not now,
Yeah,
but
yeah. You can go for passive income. Let's say you are a student, right? Let's say you are, uh, you may be studying for the in some college or something like that, right? So you can also go for passive income because you may have 2 to 5 lakhs of rupees to do, right?
yes.
Investment. So that is why you should go for passive income. And once your capital becomes like 10 to 15 lakhs, then you split your capital accordingly, right? You can keep 5 lakhs in for passive income, and remaining 10 lakhs you can do for long term investments, right? Fine, correct.
Okay.
When to start investing? So there is no age limit to start the investing. To you can start at any age. I have some students who have started from 7th, 8th standard also. So they are learning stock market because they want to start investing now. So that is actually the best time to start it, because for long term investment, to grow your wealth, you need at least 15 to 20 years. Your money should be invested minimum 15 to 20 years to create a lot of wealth. You might have heard about many investors like Rakesh Jhunjhunwala, Warren
Yes.
Buffett, like that. So these guys have created wealth in long terms only, right? 20 years, 30 years, 50 years, like that, right? So
So this is the right time.
this is the right time, but if some people have not started at an earlier age, they can start at 35, 40 also. Whatever time you are starting, that is actually the best time to do it.
Okay.
I started at the age of 26 or 27. So I still feel that I should have started earlier, but
Yes.
I started at 26, 27 age. But at that time, I was not like full time investor. I used to invest very little money, right? I mean, like 5,000 per month, like that. So I still regret that I should have invested long money at that time every month, because at the time I was working, right? I should have invested like monthly at least 30 to 40% of my salary. So I still regret that. So I don't want others to regret. So that is why I always say that you should start early.
Okay.
Even to my son also, I always say that once you start earning, you should start from that day only. You should start doing investments. So where to invest? Where to invest? You have a lot of things where you can invest, right? So first thing is like you are earning money, right? And then you have to
Yes.
save. Saving. Then comes investing. So this is a process actually, right? First you have to earn money, then you have to save money, then only you can do a investments, right? So where to invest? We have a lot of options to invest. Like you can invest in real estate.
Okay.
1 second, I have a slide. I will show you this slide. Okay. So there are two types of opportunities wherein we can do it. One is physical assets and other one is financial assets, right? So physical assets are called as like real estate, gold, silver, jewelry, commodity. Those things comes as a part of physical assets. But nowadays these assets are available in terms of financial assets also. Gold, silver, you can even invest in terms of financial assets. We have some kind of funds and bonds like that. Right.
Okay.
Earlier, when you see like long back, 10, 15 years back, at that time we didn't have the gold funds or gold bonds. At that time, people used to invest only in physical assets, like they used to buy only the physical gold or physical silver, right? So, but nowadays we have these things available in terms of financial assets also. Even real estate also, we have some kind of funds which are available in stock market, which directly invest in the real estate. So, if you invest in those funds, your money will indirectly go to the real estate only, right? Because if you want to buy a physical real estate, you need at least 25 lakhs, minimum 25 lakhs to invest in a real estate, right? Minimum 25 lakhs. Because if you want to purchase a small land outside your city or somewhere in the outskirts, you need minimum 25 lakhs, right? But in funds, you can start with an investment of even 1,000 and they will indirectly invest in real estate.
Okay. Once the capital becomes big enough, they will.
Yes. So here, what you can do is that you can buy every month like that, or you can buy once in a week. So it depends on your requirement and it depends on the availability of your money. You can invest whatever you like and whenever you want, right? So there also your money will grow like 10 to 12% of return like that. Even in the real estate also, it can grow in the same speed, 7 to 9%, right?
Yes.
But in
So
real,
that is money.
but in real estate, maybe a risky,
that
right?
is monthly or
This is like minimum 10 to 12% per year I'm talking about. And this is
Okay.
7 to 9% per year I'm talking. See,
okay.
every time whenever we are calculating the return, it is per year. It is not like per month. The return always comes in per year. Right.
Okay.
So if you see a return in 5 years, right, we call it as a CAGR, which is called as compounded annual growth rate.
Okay.
Right. If you say for an example, if there is a fund who is giving you a CAGR of 25% in 5 years, right? So that means that that fund is paying you 25% return every year for 5 years.
Okay. 25% per year. 25.
Yeah. If you calculate it, it will be like 25% per year for 5 years. So that is why we call it as a CAGR, compounded annual growth rate. So this is a term that we use in like in stock market returns or fixed returns or from bond side. CAGR. You might have heard about it. I don't know, but you might have heard about it. CAGR. Sometimes they write 15% CAGR, right? Sometimes they write 20% CAGR. That means that they have given a return of 20% per year for continuous 4 years, 5 years, or 10 years like that, right? Fine. So these are the physical assets you can invest, and then we have financial assets. Financial assets like fixed deposits. These are the financial assets. RD, recurring deposits, right? Post office schemes. Post office schemes, right? Shares, bonds, PPF, mutual funds. All these comes under the financial assets, right? So the return may vary depending on the type of financial asset, right? In FD, the return is different, 6 to 7% per year. RD also, it is, I think, the same, only 6 to 7% per year. Post office also is giving the similar kind of return. Even in PPF also, I think it is similar, I think 7% only, right?
Yeah.
We have an option of Sukanya Samriddhi, right? You might have heard about it from our government of India. That is only for the girls, and here they are giving 8.5% of return per year, right?
Okay. 8.5. Suppose if you are investing some amount, after 1 year it will increase by 8.5%.
Yes. Let's say I invested 1 lakh. Okay. So after 1 year, if you calculate in a simple interest will be like 8.5% of 1 lakh, right? So whatever amount you get, you will get around 8,500, right? So now your money will become 1 lakh 8,500.
Okay.
So this is a simple interest. But if you want to invest this for long term, like 2 years, 3 years, then it will get compounded every year. So now from second year, the interest will count on this money.
Okay.
So that is called as compound interest. So all the financial assets will give you the compound interest. Will follow the compound interest. No simple interest is calculated here. They will always follow the compound interest. Means whatever return you are getting in 1 year, they will put a interest rate on that new amount. Right. So this is called as compounding interest. Is this clear? Any doubt in this? Compounding and simple interest?
So shares we can do it in both physical asset also, financial asset also.
No, shares we can't do in physical. Earlier they used to do in physical form, like long back, 25, 30 years back. At that time they didn't have an option of like this thing. Now they are only available in demat account. We call it as a demat account.
Okay.
So like we put money in savings account, right?
Yes, sir.
So similarly, demat account is used to store stocks.
Okay.
Stocks or bonds or mutual funds like that, right?
Okay. Demat.
Right. So they are the financial asset, but that has to be stored in soft form, not like physical asset or something like that. Right. So these gold fund also is a part of, you can store in demat account, right? Gold fund or silver fund and all the funds which are related to real estate. Whatever thing is not physical, that you can store in demat account. FD and RD will be stored in your savings account, but FD and RD and these things will be stored in your bank. It's a kind of bank only. They have a separate concept, right? FD. So it's a kind of bank only. So they are not stored in demat. Only stocks, bonds, and these funds are stored in demat account, right? So once you are 18 plus years, you can get a demat account opened in the bank. There are many brokers available like Kotak, SBI, HDFC, ICICI, right? You can get it open. Right? Because if you want to invest, you need a demat account. Without demat account, you cannot invest in stocks. Okay. And so you understood the difference between physical assets and financial assets?
Yes, sir.
It's clear. Right? So these are the investment opportunities the people can choose to invest their money. Right? So there are 3 golden rules we have to follow for investing, right? Invest, first we have to invest early, right? Invest regularly and invest for long term. Right.
Okay,
So
sir.
this is for investment, not for passive income. Passive income you have to do it for short term only, right? Because you have a limited money to trade, right? You have a limited money of 2 lakhs. So you should keep on rotating the money. Keep on rotating the money, right? Fine. Is clear?
Yes, sir. Yes.
So before investing in a market, what things we should know? So before investing in a market, one must know about these following things, like share. So do you know what is a share or a stock? Any idea?
Share is the percentage equity which you hold of that company or
Yeah.
that product.
Yeah. So they have certain percentage of equity, like let's say X company has 100% of equity. So what they are going to do, they will send only 70% to public and remaining 30% they will keep it with them only, which is called as promoter holding, right?
Okay.
Promoter holding, or the one who has invested big amount in the company, right? Who has invested big money in the company. So they are called as promoters. So they may keep some 25 to 30% with them, and remaining 70 to 75% they will send it to market, so that we as a small investor or the big organizations can buy and sell this equity, right? So this is called as shares. So that is why the name comes from the shareholding, right? Shares. Right? So company is, what is company? Company you can say that it is any business, right? Or
Yes, sir.
can be any product company, or it can be any services company which are providing any services, or if they are selling any product, right? So that is a part of company only, right? Face value. Any idea about what is the face value?
No, sir. Maybe the total equity of the company or something.
No, that is basically the market value actually. the total company, which is called as market capitalization. This market capitalization. Okay. So face value is basically, you can say that in terms of every company. Have you heard about SEBI, Securities Exchange Board of India, right?
No, sir.
Okay. Have you heard about RBI?
Yes, sir. Reserve Bank of India.
So what actually RBI does? So any idea what RBI does?
They give us money, maybe
They give money
for
to
the
banks,
nation.
right? They basically control the banks, right? They basically control the banks, all the banks, right?
Yes.
RBI is basically a central bank who controls all the banks, about their operations and maintenance, how they are doing the operations, how they are maintaining their customer, all those things, right? Similarly, here also, SEBI is a authority in the stock market, right? So they control full stock market.
Okay.
Whatever rules and regulations are being formed in stock market, they will get approval from SEBI only. Then only they will be applied in stock market. Right? So you can treat SEBI like a RBI. As RBI is for banks, SEBI is for stock market.
Okay.
Security Exchange Board of India, right? So what SEBI does, based on the company and all, they will decide a face value of each and every stock or a share, right? So the face value can be of 2 rupees, 5 rupees, and 10 rupees, like that, right? Face value means
Okay, this
face value means the reputation of a company. You can say that based on the reputation of the company, how many shares are there in the market, what actually company does. So there are many parameters. Based on that, they will decide the face value of a company. So normally the face values are divided in three categories: 2, 5, and 10, and sometimes some companies will have a face value of 1 also. So these are the 4 face values which are available in stock market across all the stocks. There are around 6,500 stocks in the stock market. So all these stocks will be having a separate face values: 1, 2, 5, and 10, like that. Right? And then
that
we
is
have
set by
that is by SEBI for each and every stock or a share, right?
Okay.
Based on many parameters, certain parameters are what type of company is, what is the market capitalization, who their promoters are, what business it does. All those things will do it, right? And then we have a market value, means market capitalization, right? What is the actual value of that market? It is called as market capitalization, right? So market capitalization can be calculated based on the stock price into number of equity shares which are there in the market. Right? So that is how they calculate the market capitalization or market value of a company. Right? And then we have exchanges, right? Bombay Stock Exchange and National Stock Exchange. Have you heard about these 2 exchanges?
Yes, sir. I've heard about Bombay Stock Exchange.
Okay, so
That
this is the old exchange and this is the new exchange actually. This is quite old actually. Bombay Stock.
okay.
Both are in Mumbai only, right? So there are many stocks which are available on both the exchanges, and there are a couple of stocks which are only available either on NSE or BSE, but almost 95% of stocks which are available on both the exchanges. So you can buy and sell from any of the exchanges. It is up to you, right? So it is similar like you are going to a mall to buy. Let's say you want to buy clothes, right? And you are going to a mall, and there you can see 3 brands A, B, and C, right?
Okay.
You need to buy a jeans, right? So based on your thing, you can go to any shop and buy it, right? So
Yes, sir.
you have an option to buy from 3 stores. Here also you have options to buy either from NSE or from BSE.
Okay.
It is more or less nothing only. Just the difference is you are buying from a different shop. Same thing you are buying from a different shop. The
Okay.
the quality you will get same, but only thing is you are buying from a different shop. That is it.
But you are investing in which one, sir? BSC or NSC?
I normally my hands is set on NSE, National Stock Exchange.
Okay.
Normally I buy it in NSE, right? So this is as good as you are buying from Flipkart or Amazon, right?
Yes.
Want to buy a Levi's jeans, you can buy either from Amazon or you can buy either from Flipkart. The product will come same only, right? Same thing here also. Fine. This clear?
It's medium through which we.
It's a medium to buy it, right? And then we have a broker, right? A broker. First is we are normally called as a retailer, right? Then we have a broker in between, and then we have a exchange. So if you want to buy from exchange, we have to go through broker. So you have to open a demat account at broker end, and then you can buy and sell through broker. Right? And SEBI sits on top of this actually. So they watch and control everything. Mostly the brokers and exchanges.
Okay. So what does the broker do, sir? He sells the stock and he takes.
Basically, broker is a kind of software you can think of, a software which you can use it to buy and sell. Similarly, like UPI, right? You use UPI to transfer the money to different shops, right? They have connectivity with the shops, right? So similarly here also, broker is basically a medium through which you can buy and sell the stocks through exchange, because the main thing is available at exchange only, right? So broker gives you a medium to buy and sell stocks from exchange. It's basically a software. Right? So there are many brokers which are available. Zerodha, Kotak Securities, SBI, HDFC, ICICI. Many brokers are there. I use Kotak and Zerodha.
Okay.
Because they are less brokerage, right? We have to pay some brokerage also because they are a medium to use it, right? So we have to pay some percentage of brokerage and fees to them. So because we are using their platform, right?
Yes, sir.
So you have to choose a broker which are having less fees and all that. Like that. Fine, this is clear.
Yes, sir.
So Bombay Stock Exchange, the location is Mumbai, and they have a index called Sensex. So this I will tell you later about Sensex. Okay, consists of this particular Sensex consists of group of 30 stocks, and this was launched in 1986, right? And then the base period is 1970. First time it was started in 1978 and 79, and the date of launch, official launch date was 1986. Okay, base index value means at the time it started with 100 rupees.
Oh,
At the time it started at 100 rupees, right? And now you know the value of this. It is around 80,000.
okay. So the value of Sensex.
The one which started at 100, right? The one which started at 100 rupees, now it is 80,000. So if you have invested 100 rupees at that time in 1986, now it might have become 80,000. So there are 5,629 companies which are listed there in BSE. Okay. Timings we have to change. It is 9:15 to 3:30. Okay. So
that's the time you invest, exchange, and sell, sir.
At that time, we didn't have an option to invest in exchange in software form. They have recently launched 4-5 years back to start investing in index directly. But you may invest in index through funds. They had an option of funds earlier to invest through funds, but nowadays you can directly invest in this index. Now you can directly invest in there. Earlier they used to do it through funds like mutual funds, right? You might have heard about it. So earlier you can do through mutual funds. Right. But now you have two options. Either you want to do through mutual funds or you can do directly also. So Sensex, what is a Sensex? Sensex is basically a index. Index means you can say that, let's take an example of a class, right? Class 1, class 2 and class 3. Right? Class 1 is having 25 students, class 2 are having 30 students, right? Okay. And on top of that, there is a school, right? So basically, school is BSE, class 1, class 2 are the indexes, and these are the stocks. The students which are in those classes, they are basically the stocks. So this is how you can like correlate with that. So this class is having 25 students. This index is having 30 students. So there are multiple indexes. The main index is Sensex, but apart from Sensex, there are many other indexes. So that I will show you one second. I will show you directly in the site. So there is a website. You can know about that. nseindia.com and bseindia.com. For each index, they have, sorry, for each exchange, they have a website, right?
Okay.
So once you search in Google BSE India, right, you can see that bseindia.com, BSE, Bombay Stock Exchange, right? If I click on this website, see this is a Sensex, you can see the 75,364.
Okay.
So this is one of the index. Apart from that, you can see that there are a lot of indexes, means there are a lot of different classes, like in school, class 1, class 2, class 3, class 4, right? Same thing here, we have BSE Sensex, BSE Bank X, BSE Sensex 50, BSE Sensex Next 50, BSE Bharat 22 index. So they have segregated different indexes so that they can categorize the stocks based on the indexes. That is how they have done it, right? To make a category. So for each index, there is a separate value, right? For it is 75,000, it is for the Bank X 59,000, 23,000, next 50, 75,000, and then 7,970. And there are different stocks in these. But there could be some stocks which can be common in 2 or 3 indexes also. They can be common stocks also. Right. Fine. So this is how it looks like BSE India. So, so maybe after the class you can go through it and try to explore, see what all things, what all options are available in this website.
Okay, sir.
And then similarly we have NSE India.
NSE.
NSE India, right? So NSE India, we have different indices like Nifty 50, Nifty Next 50, Nifty FinService, Nifty Bank, Nifty 100, like that, right? Same thing as we are having in BSE, similar thing we have in NSE also. So they have segregated like this.
So that price which is being shown is the price of one stock.
No, this is the price of index. This
The
is
total index.
Yeah, let's take an example of Nifty 50, right? So Nifty 50 means it has 50 stocks, right? So there are certain weightage which is defined to every stock, right? Let's say there are 50 stocks in Nifty 50, right? So like 1 to 10 and then to 50, right? So first stock may be having 10% of weightage, second stock may be having 9% of weightage based on their market value. So based on that percentage, it should come to 100%. So that 100% will be equal to this 22,900.
Okay.
So based on the stock size and the weightage, this value will come from that. If you do the calculation, it will come from that, like that.
Okay.
So that I will explain you later, like what all stocks are available and how much they have done the weightage, like that. I'll tell you later. Just I am showing you the basics right now. Fine, this is clear?
Yes, sir.
Anything you want to ask in this exchange, NSE and BSE India?
No, sir. I'll research about it if I have any.
You just need to explore. Yeah, you have to explore because there are a lot of data, a lot of things available on these websites, both the things. So you have to just try to explore it and see what all information is available, and then you can ask your doubts.
Sure, sir.
Okay, so this NSE also the location is Mumbai and main index is Nifty. I have shown you, right? Nifty consists of group of 50 stocks. So there are 50 stocks in Nifty 50. Commenced in operation in 1994. The base period was 1993-94 and base index value was 1000. At the time when they launched Nifty, it was 1000. And now the value is 22,500. So similarly, you can invest in this Nifty also. Either you can go through funds or you can invest directly in Nifty 50. Okay. Then we have the Demat account. So Demat stands for dematerialization. So it is a process in which physical paper shares are converted into paperless form. Earlier, long back, like 30, 35 years back, we used to have the shares in physical form. At the time, we used to have the physical form, and then we have to keep it in our home. And at the time, there was no concept of Demat account. So after that, they came up with this concept of Demat account. They can store the soft copies in your Demat, and now you can buy and sell at any time. Earlier, when it was in physical form, it used to take a lot of time to buy and sell, and then it will get money in your account like that. 1 week to 10 days it used to take. Now it will happen on T+1. मतलब trading plus 1 day. The money will
Okay.
be account in trading plus 1 day like T+1. We call it as a T+1. Right. So in India, there are two softwares organizations, NSDL and CDSL, which are providing these, which are doing these things, right? Converting the physical paper shares to paperless forms. NSDL and CDSL. NSDL is National Securities Depository Limited and CDSL is Central Depository Services India Limited. So some brokers are using NSDL and some brokers are using CDSL. It is more or less same thing only. Both. So then most of the banks provide facility to open Demat account. This is how you can open the Demat account.
So I need to open a Demat account in either any bank or any organization.
So either you can open through securities, right? HDFC Securities, Kotak Securities, and SBI Securities, right? Or you can open with this kind of Zerodha, right? So they are the brokers. Right? They are the actual brokers, the Zerodha, and banks like top banks, HDFC, ICICI, SBI, they also provide this type of facility. But you can do it online only. No need to go to bank. Now they have an option of to open it online. You can do it online only. Maximum 1 or 2 days it will take to open the account.
Okay. Sir.
Because afterwards you can open the account in some days, so that once your account is opened, then I can show you how to operate the Demat account, right?
Okay, sir. I'm checking into it, sir. I'll open.
Okay. So now we have two things called primary market and secondary market. So any idea about primary market and secondary market?
No, sir.
Okay. So have you heard about IPOs?
Yes, sir, but not. I don't have a detailed application.
Okay. So IPOs are basically called as initial public offering. Okay. So whenever a business or a company they want their stock to be listed in stock market,